Good morning. I'd like to welcome you all here to the Novartis 2010 annual results presentation. Let me first start by introducing the executive committee. We have John Simons, our CFO, David Epstein, the head of the pharmaceutical group, Jeff George, head of our generics group, Andrew Oswald, head of vaccines and diagnostics, and Mark Fishman, head of Novartis Institute of Biomedical Research. So what I'd like to do this morning is first start by providing a group overview. Then John will talk more about the numbers. David will talk pharma specifically, and then I'll come back up and wrap up with the other divisions. Now, as you saw from the press release, 2010 was an outstanding year for Novartis. Our sales were up 14% versus a year ago in constant currency. We delivered great operating income leverage. So our core operating income was up 22% versus a year ago. And this led to EPS up double digits. When you think about the headwinds that we faced around pricing, I think you'd agree that we demonstrated that we're able to drive growth despite a tough external environment. I think the best part about the year was the pipeline and the innovation that we were able to generate. So at a time when some of our peers are not able to have the kind of innovation success, just in the pharma division alone, we had 13 major approvals in 2010 and 16 major submissions. So David will talk more in the pharma group about how we're driving growth in pharma. Based on that, the board proposed a dividend increase. This would be the 14th consecutive increase in the Novartis dividend to 2.2 francs per share. Now, this is a summary of the financial results. You can see that we crossed $50 billion in total sales, and one of the best numbers up on the chart is our free cash flow. You can see that our cash flow was up 30%. This demonstrates the effort that we put on generating great cash flow at a time when we are taking on additional debt with Alcon. It'll be extremely important as we pay down that debt. The best part of the year is that every single division grew at rates that were faster than their market. So just to note a couple, look at the Sandoz number. Sandoz up 15% versus a year ago in a generics market that's growing about 8%. Vaccines and diagnostics up 25% behind the strong flu sales as well as the meningitis vaccine. We have focused on our three priorities since the beginning of the year, and that's extending our lead in innovation, accelerating growth, and then driving productivity to improve our margins. And I think the focus that we have had has helped every Novartis associate to be able to figure their role in developing this. So just starting with innovation, I want to talk briefly about some of the innovation that we were able to deliver. As you know, we received and launched Gilenya. We received U.S. approval. Gilenya is our new oral compound for multiple sclerosis. Recently, in the fourth quarter, we received also expansion. We had a positive CHMP opinion in Europe recently, as well as approval in Switzerland and Australia. So that will become a very important compound for us going forward. Sandoz, with the approval of enoxaparin in 2010, drove tremendous Sandoz results. And then you can see some of the major submissions that we had in 2010. One of the key submissions is our meningitis B vaccine in Europe, which we were able to file in the fourth quarter. The brand name is Bicero, as you can see up on the chart. Now, with the final 2010 numbers in, you can see that Novartis led the industry with the number of new compounds that are approved in Europe and also in the EU since 2007. This is, I believe, a tremendous accomplishment, and it's further evidence that our innovation is helping to drive our growth. Now, the second priority was accelerating growth, and this means translating that innovation into sales and profit growth. And this will be particularly important ahead of the Diovan patent expiration that is coming up. So if you look at 2010, newly launched products accounted for $10 billion out of our total, or 21% of our total portfolio. This is an unprecedented number in terms of the transformation of a portfolio ahead of some critical patent expirations. We also expanded our footprint in emerging markets. We announced in December, in the fourth quarter, a $500 million investment in Russia, where we will build a state-of-the-art pharmaceutical plant in St. Petersburg. We also, on top of that, are making good progress on our research and development site that we're building in Shanghai. And in Brazil, we built a strategic partnership to improve public health, so every child that is under the age of 2 in Brazil will be vaccinated with our meningitis C vaccine. The third priority was to improve our productivity, and we were able to demonstrate that despite keeping research and development at the very high end of the industry, we were able to increase our core margin almost 2 full margin points, so 190 basis points. This was driven by focusing on areas of manufacturing, on procurement, and on marketing and sales to become more efficient. I think this is one of the ways that we've been able to offset some of the cost containment measures that we saw in Europe in 2010. So our above-market performance in 2010 reflects the focus that we have on our 5 growth platforms. David's going to discuss the pharma division, and I'll discuss some of the other platforms. But right now, I would like John Simons to come up and to provide a little bit of a better overview of the financial results for the year. John?